Hello students, myself Dr. Narendra Rally, Assistant Professor, Department of Management, VSM College, Ramchandrapuram. I am here to explain you on the concepts of investment management. Investment management is a subject which lets you gain knowledge about various financial investments and returns, risks associated with such investments and all. You all may know by this time, you know what is shares, Sensex, then stock exchanges, Nifty and all. So all those concepts will be dealt, you will be getting knowledge in this subject. So investment management, for your semester you have total 5 units, where in the first unit you have basics of investment, in second unit you have various security markets, that is primary market, secondary market and all, and in third unit you have risk and return concepts. This is what is risk, what is return and all, and how on the way they both will be calculated. And in the fourth unit you have valuation of securities. Securities here in the sense, investment management is sometimes called as securities management also. What is securities management? So just as a introduction slide, you securities means it can be shares, it can be debentures, it can be bonds, anything. So these securities must be valued at two prices, either maybe intrinsic value or extrinsic value. All these concepts will be dealt in this fourth unit. And in fifth unit it is completely dedicated to the fundamental and technical analysis, that is completely analysis of equity shares, that is fundamental analysis for the long term and technical analysis for the short term. And along with these two things you will be dealt with various theories in the investment management. Coming into the first unit, you in the first unit it deals with the concepts of investments. In that you have attributes of investment and speculation. You will be have you'll know the features of good investment process, investment instruments, and finally derivatives. Okay, by this you know your paper, you know the contents, and you know what is the first unit is about. First of all, what is investment? What do you mean by the term investment? Oh, you can say it is an economic activity. Okay, investment, like we're keeping some amount of capital into an activity, like when you keep on starting a business, you say invested this amount, invested that amount into such thing. So these things are known as investment for a layman. But as a finance student or as a students of business administration, for you people investment means it is an economic activity. Getting a profit or loss is subjected to management of investments. So once you invest some amount, you'll be expecting a return. That return may be profitable or not. So it depends on the way you manage all the investments. Investments are subjected to risk. So when there is an investment, besides there will be a risk for such investment. And the art of investment is to see that returns should be maximized, at the same time risk should be minimized. So this is the basic core element of investment that you have to understand initially. So going further, you'll be having the details of what is investment. Again, you'll be having understanding the investment. What is investment? It is an activity that is engaged in by people who have savings. That is, investments are made from savings, or in other words, people invest their savings. But all savings are not investments. All savings are not investments. Investments may be defined as commitment of funds made in the expectations of some positive rate of return. Expectations of returns is essential element of the investment. In the financial sense, investment is employment of funds on assets with the aim of earning income or capital appreciation. But in the economic sense, investment is the net addition made to the nation's capital stock that consists goods and services that are used in the production process. The financial and economic meanings are related to each other because the savings of individual, that your father earns something, I earn something, and my parents earn something. So like that, every individual earns, have who is having earning capacity earns something. So every individual's earnings flow into the capital market as financial investments. Say for example, you have to understand, if I buy a car, the car amount will be utilized by the company manufacturer, where that manufacturer will pool the sales amount and will invest in some other activity. So that is why I'm saying it is a flow into the capital markets as financial investments to be used in the economic investment. Concept of investment. Investment is a commitment of funds to one or more assets that is held over some future time period. It is maybe conservative as well as aggressively speculative. Whatever be the perspective, investment is important to improve future welfare. Funds to be invested may come from assets already owned, borrowed, or from borrowed money, or from savings, or in some cases foregone consumptions. In economics, you'll be having this foregone consumptions into as opportunity costs. So that's a different thing. But let us now concentrate into this thing. By foregoing consumption today and investing the savings, investors expect to enhance their future consumption possibilities by increasing their wealth. Investments can be made into tangible assets like marketable securities or to real assets like gold, metal, real estates, platinum, and all. So, more generally, it refers to investment in financial assets. There is a meaningful sentence in the famous Forbes magazine: money is not everything in life, but make sure that you have earned it a lot before start thinking like the same. This quote is reinforcing the importance of money in our life. Financial management and investment awareness become the success mantra for everyone in the current era. Investment or financial awareness is not about earning a lot of money, but it points out that we should be very careful while spending, saving, or investing it for the future. Today, not just India, but the whole world is facing the problem of soaring prices and inflation. It has become a matter of great concern for all. And added to this, it is rare to find a person who has enough money to fulfill every need of his. Can you see a person who is completely fulfill his need and sit and settle down? No. When one thing starts and ends, the other immediate necessity will be starting. In such way, it is rare to find, or it is difficult to find a person who has enough money to fulfill every need or wish. Studies have shown that even multimillionaires believe that they need about twice that they have to feel worry free. The basic rule of economy is that resources are scarce and wants or ends are unlimited. Resources are scarce and ends are unlimited. Remember, if you remember this sentence, like your resources are limited and your wants or needs, your necessities, your ends, whatever be the term you called, so these are all unlimited. But what is the limited thing? Resources are limited thing. And here comes the concept of efficient utilization. You have to get maximum results out of the minimum efforts, minimum assets, minimum investments. And here comes the same, the rule is applied even in the concept of investments. Yes, investment awareness is a part of financial literacy. Financial literacy or awareness means the set of skills and knowledge that allows an individual to make informed and effective decisions through their understanding of finance. Investment and financial literacy is important to help individuals meet their life goals. Investment is an acquisition of financial product or other item of value with an anticipation of favorable future returns. Investing is a serious subject that can have a major impact on investors' future well-being. Investors have series of investment avenues and each of them differ in terms of risk, returns, safety, security, regular income and other various other parameters. It has different meanings in finance and economics. Finance investment is putting money into something with the expectation of gain. This is the meaning of or meaning and definition of investment. See, in this slide, you understand why the investment is necessary. If you look at the investment slide, why investment? See, here at the left hand side, you have goals of life. What are such goals you have? Owning a house, own house, children's education, daughter's marriage, peaceful retirement, legacy for the next generation. These are all common goals of each and every individuals according to their perspectives. Okay, how in order to achieve this, how to achieve? You have to save part of your earnings. For example, if you earn 100 rupees today, you have to save at least 30 to 40 rupees to achieve your goal of own house. So save the part of your earnings. What I mean to say is you have to save a partial amount of your earnings. Make the earnings sweat to expedite reaching the goal. Okay. You just saved the as discussed, you just saved 40 rupees out of the 100 rupees that you earn, and that 40 rupees have to be worked for you, has to work for you. You shouldn't keep that 40 rupees in your bank account sitting idle. That 40 rupees should earn again income for you. So this is why the investments are important. Investments are required because savings alone will not be enough to meet the goals and as well as cost of living. Observe this table here. I mentioned cost, cash stored at house 100 rupees. Nominal value after 10 years, that 100 will be only 100. Real value after 10 years will be the 61 rupees. He assumed that there is a 5% rise in prices index, that is inflation. See, the same, that 100 rupees, if you are not willing to keep that at home and you want to invest in an avenue which is giving 6% return, that after 10 years that 100 rupees will be 179 rupees and the real value will be like 110 rupees, same at the inflation rate of 5%. You imagine now the beauty of investment, the beauty of compounding, that is cash, keeping the money idle in your savings account is not a right way, but there should be a savings account filled in with a secured amount and the rest of the amount must be invested into the economy. So this will help you to reach your goals, not your bank savings account. Objectives of investment. Objectives of investment, you have commonly two main objectives, that is primary objectives you have safety, income, growth, and in the secondary objectives you have uh, minimization of tax, marketability or liquidity. Let us now discuss each thing. Primary objectives, you have safety. What is safety? See, I'm saying that you have to invest in the economy. When you have to invest your own hard earned money into the economy, you have to look for what? Safety. That is the primary objective of any investment. The capital you invest today must ensure the safety for you to feel secure even after the 10 years. So such thing is called safety. Understand the perhaps there is a truth to the axiom that there is no such thing as completely safe and secure investment. Yet we can get close to ultimate safety for our investment funds through the purchase of government issued securities in stable economic systems. See, if a primary objective is safety, you have to buy bonds, or you have to buy funds from bonds, or the national savings certificates and bonds issued by Reserve Bank of India. So if you trust Reserve Bank of India and you buy some bonds or buy some gilt edged securities, gilt in the sense gold securities and all, you'll be feeling safety. So such things must be there in your securities or portfolio. And the second thing is income. What is this income? Okay, you just want to save, you just want to invest one 5 lakhs for your children's education, and you do this. You do go went into a bank and deposited that 5 lakhs into a bank as a fixed deposit. Now imagine that fixed deposit will give you an interest, say for example 7% or 10%. What is that interest? Income. So investments must also give you income apart from the safety. And the second thing, and the third one is growth. Okay, before going to discuss the growth, let us let me give you a just a sentence about income. The safest investments are also the ones that are likely to have lowest rate of income or return or yield. See, if I'll give you two options. I'll give you two options. In the first option, you'll be getting invested 5 lakh rupees, and the second option also you'll be getting invested 5 lakhs rupees, and the time horizon I give you is within 6 months. In the first option, remember, within 6 months the 5 lakhs will be returned double, that is 10 lakhs. Is that a valid reason, or is that a valid one? No, right? Okay. In the second option, you invest this 5 lakhs, and after investing this 5 lakhs, you keep on checking or track your investment. At the end of say fifth year or sixth year, you'll be getting 5 lakh 20,000 or 5 lakh 30,000. See, is this a income? Yes. In the earlier case, after 6 months, 10 lakhs is also an income. In this case, after 6 months, 5 lakh 25,000 is also an income. Which is having the more safest options? Generally, it is incomes that are low will be the safest options. I'll tell you an example. Though I must not quote this example in this platform right now, but I'll mention. See, the savings bank account that you daily or monthly save, your parents will save certain amount into your bank accounts. Actually, to speak frankly, that savings account is not your, or not that savings account shouldn't be called as an investment avenue, but that savings account is one of the option to save your money digitally. That's it. And for that purpose, due to the concept of inflation and due to the concept of compounding interest, you'll be getting interest amount at hardly 5% annually. Okay, this is the income. And then last one is growth. What is this growth? Every investment that you made is subjected to, or you will be looking for growth perspective. Your money should be looking for growth. Your investment should be looking for the growth of capital, which is most closely associated with the stocks rather than any other securities. Secondary objectives: minimization of tax, marketability and liquidity. Yeah, see, minimization of tax. There are certain investments, say for example, if you observe your parents or your friends, family members and all, there are some people in most of the cases who at the end of every financial year will try to go towards an auditor, ask for no tax statements, ask for filing the tax statements, and in such process they will ask, sir, I made a charity of 1,000 rupees. Can I deduct that amount? I made an insurance under ATC. That can I deduct that amount? See, investments apart from the primary objectives will all investments will also be made to reduce the tax burden of a on a person. And the last one is marketability or liquidity. You people know this marketability or liquidity very well, even in your earlier semester while dealing with the forex management. So, what is this marketability or liquidity? I say it is the easy convertibility into the cash. A security, when it is easily convertible into cash, right from your hands to the counter and right from the counter to you, when you are easily able to convert the cash, that's those securities are called as marketable securities, and that future is marketability. Importance of investment. See, every investments are a motive of investment are for three purpose: transaction purpose, precautionary purpose, and speculative purpose. See, the name itself says transaction motive or transaction purpose. What is this transaction purpose? No, it is the demand for the money for current transaction of the people. You are at a counter of sale, you are at a point of sales, so that at that place you have to give your cash or card to the POS operator and then hand over or handle your own goods. Transaction motive, that is, it refers to the demand for money for the current transaction of people hold cash in order to bridge the interval between receipt of income and expenditure. This amount will depend upon the interval at which the income is received. The business and enterprises also will keep a portion of their resources in ready cash to meet the current needs. Okay, what is this precautionary motive? The name itself says precaution. Certain amount of investments will be keeping a sub keep will be kept separately as a measure of precaution. Why? Investments are subjected to risk. When any such investments are undergone through any risk, there is a loss of capital. In order to bear that loss of capital, certain amount of money is kept as a precautionary motive. And the last one is speculative motive. It refers to the desire to hold one's resources in liquid form in order to take advantage in the market movements regarding future changes in price. See, speculative motive. This speculative motive can be easily understood with an example. Like, for example, if I want to earn money in a short span of time, I just want to know the trading and all. I'll be going towards a stockbroker. Say, for example, I have a demat account with Motilal Oswal, so I'll be going towards, or I'll be calling Motilal Oswal executive. I'll ask for today's stocks movement, and then I'll now find a place where to enter and where to exit, and between that entry and exit times I enter into the market and I play with these stocks, and I may sometimes gain, I may sometimes lose, but the speculative motive is to gain without any rules. To gain without any rules. Here, rules in the sense, there is no particular rule. Speculators are those people who will buy and sell the securities irrespective of their profits or losses. Say, for example, in one case they have profits, and the other case they occurred losses. These losses will be covered by the profits of a different category. So, in such way, speculators motive is. Need and importance of investment. Of course, any investments importance is longer life expectancy. See, even if I buy a smartphone, I used to think that it should be stable for at least 4 to 5 years, which is not even happening at all. Longer life expectancy, the minimum investments period will be like, if it is a long term investment, that is minimum 3 years to 5 years or 10 years, as the case may be. increasing rates of taxation. See, investments are those I said earlier will be made to reduce the taxation. Also, when in the coming days when we feel that tax rates are going to increase, and in order to save that also we used to invest. High interest rates, high rates of inflation, in order to bear these two things also we used to invest. Larger incomes, there are certain expectations where investments have larger income source. In that way also investments are important. And finally, availability of complex number of investment outlets. You have shares with you, you have debentures with you, you have gilt edged securities with you, you have bonds with you, you have saving certificates with you, everything. So available, there is a complex number of investment outlets. This slide will let you know about the investment activity. Investment activity includes buying and selling of financial assets, physical assets, and marketable assets. Just have a look into this by just pausing the screen. See, this slide is having a little importance in your presentation. Stages of life. See, at the earlier young age, we invest security against the uncertainty. You have insurance, small savings, two wheeler, like that. When you are crossing your early young age and coming to the young age, you actually look for tax saving. You plan early, and you are thinking to build the wealth, that you will buy a home, you will buy a four wheeler, you will look for the tax saving schemes and all. After young age, you will be having early middle age. In this early middle age, you are looking for creation of wealth again. In this stage, since you are having certain stable income position, you'll be looking towards equity and mutual funds. And then at the middle age, you'll be looking for children's education, gold and mutual funds, etc. And you always look for retirement planning. So this is the flow of surplus money. This because of these purposes only investments are made. Attributes of investment. What is the term attribute? Can I say the character? Can I say the characteristic, or can I say the features? So what do you mean by attributes of investment? Attributes here the quality or the features of investments. Every investor has certain specific objectives to achieve through his long term or short term investment objectives. Such objectives may be monetary, financial, or personal in character. To enable the evaluation and a reasonable comparison of various investment avenues, investors should study the following attributes: rate of return, risk, marketability, taxes, convenience, safety, duration. These are all the attributes of investment. Now, let us first come to the rate of return. What is this rate of return? It is on any investment comprises of two parts, namely annual income and the capital gain or loss. See, when I buy, for example, 10,000 shares of Reliance, I just made an investment of 10,000 rupees into Reliance company. I'll be getting every month a dividend. At the end of fifth year, I thought of selling these shares. At that time, up to that, by the time that market value, I'll be getting capital gain. So, an investment is having two types of return. The first one is regular return, and the second one is capital gain. And the second attribute is risk. It is the variability of rate of return. To explain further, it is the deviation of the outcome of an investment from its expected value. Marketability, as discussed earlier, it is the high liquidity position. It can be transacted quickly, the transaction cost is low, the price change between two transactions is negligible. Taxes. Some of our investments would be provide us with the tax benefits, while others would not. This would also be kept in mind when choosing an investment avenue. Convenience, here are taking about the ease with each investment can be made and managed. The degree of convenience would vary from one investment instrument to the other. Safety and duration. Although the degree of risk varies across the investment types, investments bear some safety. It is important to determine how much risk is involved in an investment. Duration. The duration is how long you are going to hold one investment. So this is your duration. You may hold it for a short term, you may hold it for a medium term, or you may hold it for a long term. So this is the duration.